Hello traders, Gary Wagner here at just about 1 o'clock in Honolulu, 7 o'clock in New York. It is Friday, first day of May 2020, and this is the Daily Report for Gold and Silver, our weekend review. And we are ending the week in terms of gold pricing on an up note, a very respectable gain in the market. As we go through our prices, you'll see we did have a mixed bag in the precious metals, but we did identify an interesting two-day pattern in our daily candlestick charts that indicates a potential bottom. We've got to see follow through next week, of course. Let's take a look at current pricing and then to our technical studies, and we'll talk in detail about the pattern. Gold staged a very respectable recovery today, gaining $16 on the day. And although it made a lower low than yesterday, trading to 1676, it did close well above 1700 to close at 1710.20. When we look at spot pricing for gold, that still is just a couple dollars below 1700 at 1698.21, putting it up $12 on the day. And silver had a gain today of approximately 9 cents, back over $15 at 1506.5 cents. Platinum and palladium did trade lower, the exact opposite of what we saw yesterday. A $34 decline in platinum futures, $778.60. And then palladium lost about 4.3%, total of $85 as it continues to trade to lower pricing, now at $18.70.30. The dollar was fractionally higher today, up 0.9%. at 99.12. Let's take a look at our technical studies. There is no doubt gold did stage a respectable recovery today, gaining $16 on the day. The first chart that I do want to take a look at today is a short-term 4-hour candlestick chart. That is what is up on the screen. What we can easily define is a couple of things. The first is when we look at our Fibonacci retracement on the short-term chart, the 23% retracement level is exactly the low that we saw achieved in trading intraday when the market went to roughly 1676. We can see different areas on this short-term chart where it was definitely a level of support to some degree here, and absolutely in this area here. We can also see instances where it was resistance, such as this area right in here. That being said, the other thing that we can determine off this chart is the fact that it did close back above 1700. When we look at our dailies, we'll see that that is a key level, not only in terms of a psychological level, 1700, but it is also where the 21-day exponential moving average currently resides. We are looking at a weekly chart of gold futures with gold futures in candlestick format on the top of our screen and Henkin Ashi candles on the bottom. What is clear is we did have a decline this week overall, but we had a nice recovery today, and we'll definitely see that in our daily charts. When we look at the Henkin Ashi charts, we see that the uptrend which had started absolutely diminished. You can see how these body sizes have shrunk. The tails have reappeared, the lower tails, because that's what you look for when you're looking at a Japanese average chart, when you're looking at an uptrend. For example, when you look at this area here, you can see that there is an absence of lower wicks here as well as here. And then on this rally here, it began the same way with the absence of lower wicks. So while we are still in a defined uptrend, we did see a defined weakening, at least according to the Henkin Ashi. But as you will see on the daily charts that we'll pull up next, we did get our first indication that a potential bottom is in place. Traders, we are looking at a daily chart of gold futures. However, this is taken off of a screen print that we did earlier in the day before they marked the current close lower than it is currently trading, which is 1710.20, up $16 on the day. And in this chart, you can see that we've identified a simple two-day pattern called a piercing line. Simply put, The definition and criteria of a piercing line is, first, it has to occur after a downtrend. We can certainly say that it has met that criteria. Secondly, you get a large red candle, and that has to be followed by a green candle that opens below the close of the red candle here and then closes at or above the midpoint of the prior day. And as you can see, we're right about midpoint of that candle. When we look at our current chart, you'll see that this body size has shrunk considerably, and that's because they're marking the close at just above $1,700 per ounce. But this particular pattern must be followed by a confirming candle before you would take that call. And I've just added what we would look for as the market opens up Monday morning in Australia, and of course Sunday here in the United States. And that confirming candle would be a green candle with a higher high and a higher low than the candle we saw today. If we do see that, it gives us a real indication that we are witnessing a bottom in the market, short term at least, because what we're seeing is a higher low than the previous low that came in, and that would take us to our third higher consecutive low. Traders, we will look to see how the market opens up in Australia, Sunday here in the mainland, of course, and if we see a follow through to today's higher pricing, it would indicate that the lows achieved in trading today will be a short-term bottom in the market, and we will act appropriately. This has been Gary Wagner, wishing you, as always, good trading. Have a great weekend. Stay healthy. We'll talk to you on Monday for the next daily update and review. Bye-bye.